is now Thursday, officially. Um, Technically, not quite here in Vegas, but in New York, it is now Thursday. London just opened 1 minute ago. Thursday, October 13th, by the way. CPI comes out in, how many hours is that? Like 8 hours or so from now. So it's very possible that we get a choppy London session that doesn't really offer many good trading opportunities. And if that's the case, that's okay. We can do some. We can study some other things. We can review the week so far, and we can look at um, what like previous CPIs look like, things like that. Otherwise, if we get some live trading opportunities, we will take them. So this here is the 24 tick Renko chart with the, this is actually the more simplified version of my algo. The algo I'm using is based on Simon's trade and perform algo, which is an execution algo based on order flow and market structure using Renko bars. I took that algo and then added some other signals and changed some of the colors and layouts. When all was said and done, it started to get pretty busy, and this is what I've been using. And I realized when things are really choppy, there's just too many signals, and it's getting me into trades that I don't really want to be in. So I decided to make like a pared down version with a lot of the lines removed, and also just like simplified some of the signals a little bit so they wouldn't occur quite as often. Like basically made the conditions required for them to fire a little bit more difficult to achieve. And then I'm also trying to calibrate for ES. I used to trade ES exclusively, but now I've been primarily scalping NQ. I personally find NQ a little bit more rewarding for my style. ES a lot of times is the better trader when things are too fast to trade NQ, and when it's really volatile, ES can give you a little bit better liquidity. But when it's not doing a whole lot, when it's not trending, for instance, NQ gives better rotations. So I've had success there. But a lot of people do prefer to trade ES, and so I wanted to make sure that at least most of the algo signals also work there. I know Simon's do, because we trade ES in the room. So all of these signals work on ES. But what I'm curious about is if some of the ones that I've added may work as well, and they're all going to require a little bit of calibration, just because the two markets do behave differently when it comes to order flow. It takes maybe more, like for instance, just to move one tick in ES, it's going to generally take a little bit more like relative volume, whereas NQ can move back and forth within a range but not really do anything. ES does that too, but it's in a very small range, maybe too small to even print a Renko bar. So I have to make all those little adjustments, and I'm in the process of doing that. So over here on the left is the 8-tick ES. So I have taken a couple trades in ES, and that seems to be working pretty good with the current calibration. I'm just not totally confident because I haven't thoroughly back tested across like multiple different markets, like behavior types. I've had a couple days to look over it in the last couple weeks with like trend days and then choppy days and things like that. But we haven't had there's many phases of the market that we haven't seen for a while, and so if things start to change, for instance, like tomorrow, if we get like if we get moves that are much bigger, like ES, something like 20, 30, 40 point rotations all of a sudden, it's yeah, I don't know whether or not I'm going to trust these signals. So tomorrow I probably won't, or like I should say during RTH, I probably won't be trading gas, but I'll be watching it carefully to see if the calibrations are working. But during Globex is a really or London is a really good time to do some of this like testing, forward testing. Um, and I can use if I want to try to execute with it. I can use one of the Apex evaluation accounts. So it's technically a paper trade, but it will benefit me if it works. And then if it doesn't work, worst case scenario, I just have to like reload those evaluations. So it's um, the consequences are small enough that I'm willing to do it. It's somewhere in between real money and papered money, right? Because like it's not actually routing to the market, but if it is working consistently, I can what's it called, qualify more accounts. And on Apex, you can have up to 10 performance accounts funded at a time. So um, yeah, that's what I've been doing these last few weeks. Uh, but most of my trades are coming on NQ, and I'm willing to take real money trades with the I'll go with NQ. But like I said, I've been using this more busy layout, which just has a lot of like automated support resistant lines, and then the just uh, a lot more studies running, and then I'm experimenting with a new channel system. The one that Simon uses in Trader Perform Room looks like this, and it's got basically a downstairs and an upstairs, and then I've added the midpoint in the middle of the gray. But the idea is pretty simple. It's just that you want to take your shorts upstairs and you want to take your longs downstairs, right? And then generally, you should expect most of the volume to go off in here if it's balanced. And if we can't make it inside of the middle, like here and here, see how we can't get any like points of control, those little dashes, we can't get them inside to the middle here. That's bearish. And then what it looks like when it's bullish is the exact opposite, where you can't pull back into the beyond the midpoint like that. So see how we bounce off the top of the downstairs, right, the purple, and then once we get upstairs and we try to come back, we can't put any dashes, any point of control dashes below the midpoint unless it's an up bar. See, that one's an up bar, so as soon as volume gets down there and price gets down there, they react and buy, and then they try to do it again and they react and buy, right? And you're going to get higher highs until that changes, and so that changes right here. And so you no longer buy, like if this was a star up, or if this was a star up, or actually this green one is a good example. The green candle right there, the green bar, is usually a buy if it's bullish, if it's downstairs like that. But in this situation, it's not, because we've traded above the channel and we've printed a sell signal with a star after a pink bar, and then we've after that we traded below the midpoint with volume. So on a bearish bar, we got a VPOC below the midpoint, and so at that point you stop buying until you can take a high. So here would be your very first aggressive buy, but you could skip that one too. But that one's technically the most aggressive buy that I could take. And then if it starts doing that on the opposite side, I would not. I'd have to do the exact. I'd have to flip, right? But like if you're bullish here because this works, then your next buy would be this green one, and you just kind of keep going like that. So it's kind of like a rotation by rotation. See, here's another one downstairs. So that's a pretty good buy, and you'll just keep doing that until it's no longer balanced or bearish or bullish. But like this, see how it gets up above, but there's no pink bar here, so that means this green bar you can still buy. And like here, there's no pink bar here, so it's still okay. And it would only be if they fire short at the top. When does that happen? I'll show you. It actually did not fire here, but you can see we got underneath the pivot, and so once this happens, underneath the pivot, now we're watching for, this would be aggressive, and you're watching for the midpoint to act as resistance to start looking for shorts. So right there, that's your first aggressive short. That one technically fails, but you can re-enter it right there on the star, and then you get paid back, right? So like it's a scalp system that you can take trades back and forth. Like I said, it does work on ES2. There's nothing wrong with that system. You can do it just like that all day long, and it works great, right? And I did it for a year without adding anything to it. But what I started to find is that as I learned more trades on this system, I started to have trouble seeing them because it requires that you have some lines drawn, and you have to monitor things like volume and structure and market phases and things like that, right? Or just like some of the things I was just talking about, monitoring whether or not you've gotten a VPOC on a bullish bar above the midpoint, things like that, right? Like things that take some mental power, but it's a lot easier, in my opinion, than trading this, right? Where you have to interpret the entire footprint, not only know where the structure is and where the levels are and stuff like that, but also decide, is this even a signal to get in, right? So the idea is to simplify things by having the algo read the footprint, and then I just have to look for the patterns in the algo, right? So this is kind of as busy as I could possibly handle. And when things are moving fast, it's actually kind of nice to have all of these signals, because all you have to do is just look at the last bar and you know what you're looking for, so you just wait for it to happen. But what I found today, since it was so choppy and we didn't really move much, is I was getting signaled into trades in spots that I didn't really want to be. And I knew better than to take them all, but at the same time I realized, you know what, this system might be great when it's really volatile and fast, and I don't have time to like go through and draw the lines and stuff. But when I do have time to go and draw the support resistance lines, and I expect the market to stay in pretty much the same general area because it's balanced in that area, or it's consolidating, the extra signals and the extra lines were actually causing me more distraction than anything. So like I said, I'm trying to simplify them. But I've changed on this one the channel system. Not because I didn't like this channel system. I do. I think it works great. And this one is just the outside ones of this. I've gotten rid of the middle two and replaced it with just the midpoint. And so my colors are just different because I find the rainbow a little bit overwhelming. So the blue lines here are actually just the outside lines here. And that's what I was used to. But like I said, it does create a lot of lines. And so instead, what I'm trying now is a slightly different twist on it, and I am filling in the area in between and treating it as like a zone that needs to be overtaken, or for instance, this green is a good buy here because we've gotten, if you think it's bullish, because we've gotten below the channel, and so the likelihood that you're going to get volume developing back up here is good. The mean is going to be this gray line, and so if you see this gray line like cinch up to the top like this, the chances that you're going to get a mean reversion move is higher to the upside, I mean. And then the exact opposite will happen when we go, what you'll see is when we're at the highs above like this. That one's not a perfect example. Let me find one where we're way up there. Yeah, here's one. So this is an actual setup, and you can see that once you're up here, you expect the market to come back to the mean, which in this case isn't very far, but you also have some support down here that you can target. There's better examples when it gets a little more extended. Let me find one. Here we go. So it gets extended beyond the top of the channel. You get a sign of aggression to the short side. This one wasn't quite a setup, but it alerted me that this one was going to be valid. And then again, your primary target is back into the middle, and you see how this gray line is much closer to the bottom than it is the top. That's again a sign that your mean reversion trade is probably going to work more often than it doesn't. And then you can hold runners, and if you get that, if you stumble onto a momentum trade, that's always nice. The difference between this and these, the blue ones, if you look at them back to back, what you'll see is that the blue ones are significantly farther apart. So like here, the pink bar is the one that got out of the channel system, and here it's the white bar that gets out of the channel system, right? So on this system, I'm alerted a little bit early, and I'm prepared for this retracement a little bit earlier. But the only trouble with that is that it also means that it could, if you use all of the signals that I would normally use on here, you could potentially get triggered into more trades that stop because they get stuck right inside of the channel, right? So it's very important that like you have some other reason to want to get short other than just it got above the channel. It's unfortunately not that easy. It's not that simple. I mean, you can't just short every single time it goes above the channel, because if it is trading with momentum, you're going to get steamrolled. So you do need an order flow setup. And if you have a structural setup, that's even better. Like if you could get above this high, or trading above this high like this, just like we did here, and then rolling over, is a better short than just a random test above this area. Just because that's how futures generally trade, is they look behind pivots prior to mean reverting very often. So especially when it's balanced. So again, just because it trades back there, just because it touches this does not make it a short. But if it closes down here and the location's correct and you actually are bearish, then you can take it. And so having less signals means that I have to do a little bit more work when it comes to like thinking about where I want to trade. But I've got other screens with candlestick charts on them, and those have levels that I want to be active in. So for instance here, since we know that we're right now like in this balance zone, right, I can pretty simply say, okay, I really don't want to long anything higher than this, and I really don't want to be shorting anything lower than, let's see, we'll do it from here, than this. All right, that'd be like the very lowest I'd want to short if I think that this balance zone is going to continue. Obviously, if it goes higher, you could short higher, right? But I'm just showing like the most recent pivots that we might have liquidity going up, sitting behind. All right, like this one, there was liquidity sitting behind. Did it? I think it broke it by like one tick. Yeah. So they found liquidity and then raced back up. And so they could do the same thing on this one, find liquidity above. So technically this could come all the way down, I guess, to here. That's pushing it a little bit. But if you want to be aggressive, that'd be as aggressive as I'd be willing to get. I suppose maybe you could stretch it to the close of Tuesday, RTH. So something like that. But the closer these get, the smaller your risk reward is. So you do have to be a little bit careful about where you're gonna draw the line in the sand. But what you can, if you have a good system for figuring out like where you want to be getting your trades, then all you need is a way to know when the executions occur. So for instance, I'll redo this here. So NQ, right? So let's take these just as an example. So all the dash lines are just fib drawings that are anchored off of a Lua range level. If you don't know how to do that, I've got a video about it called Precision Targeting with the Voodoo Range, and it teaches you how to draw those. But we have two. Whoops, that's the wrong program. We've got two fib extensions landing in this zone here and here, right? So 830.25 and 809 are the two like most likely spots for pivots. It doesn't mean it has to happen on that exact tick, but it might be smart to look inside that area, right? So if I wanted to make this a little bit more specific, I could do like that. Otherwise, if I wanted to instead include yesterday's settle, which is like 41, I could include that. And so then what I would do is, let's say 09, 30, and 41. So now I can come back here and I can actually just mark them off. 809. And then we have 30. So 809 is the fib. So let's see, where's that exactly? 809 is down here. And then we have 30, 25. Oops. 30, 25. Right? You don't have to have it exact. It's not an exact science. And then we're gonna go 40, which is pretty much where we are now. And so if we were trying to long in this area, what we should be looking for is, are we rotating around any of those levels? And can we get an execution that makes sense, right? Not just like a random signal, but an execution that fits with the structure, that picks up liquidity at one of those levels. Now, I also have this purple level, which is 816.75, and that is a like a 2-hour VPOC or something. It's something I found on another time frame, right? The one we were looking at was the 30 minutes. So obviously you can do this at any time frame, but you can kind of see how these are close together, right? So what I would do typically is and I've had those levels on there all day. So I would like come back here. You can see that these levels work pretty good if you looked for the right signals. So I would mark these two as like a zone. And then I'd say these two, the 30, 50 fib, and then the 40 settle price are also pretty close together. So we can make that another zone. Now there's nothing wrong with taking trades in here. But what we really want are for trades to respond to one of those levels. So it doesn't have to be the tick, but we should assume that there is liquidity sitting behind them if we think that we have a chance for a bullish rotation. And so this one gets really close, but if that's a signal I'd probably take because of the order flow. You've got a really big rotation here, so the likelihood that you get a nice mean reversion is pretty good. But you can see here we clearly traded into the zone and then fired off an algo. And then this is a valid signal because it traded under here and traded back in. So that's a buy, and then you can add here. And then this one, same thing, right? And you can see how this whole area up here, you can just ignore. Like, it doesn't matter what they do. If you're bullish, if you're looking for long only, just to simplify things, right? You can do the same thing on the short side. But let's just look long only for right now, because that's what really matters. And like I said, I'm looking for, or maybe I didn't say it, I'm looking for 10 to 15 points, and then for my first take profit, and then beyond that, it's runners if I think that there's a chance we can go further. So that's an entry. See how we interact with the area, found liquidity behind one of the levels, and then printed an algo signal. Same thing here. See how it trades just a little bit below the level. Right. Now notice this dashed line is the Voodoo range level. We're orbiting around that in a expanding negotiation. So this test here is a little bit aggressive. You'd only take it if you thought it was bullish with momentum. So it works, but you'd have to identify that there's new momentum. See the difference between this price action, this side, middle, this side, right? That's like balance. And now look at how the channels start to perk up, and we trade on the top above the channels, but then when we come back, we can't hold below the channels. See that? So if you identified that and you knew the level, you could be like, oh, I can, and then you could also see that this star didn't produce a retracement, and yet this one gave a pretty good extension. So see how all the bullish signals are leading to relatively quick reactions, and if these lows aren't even tested underneath, but if they are, what you should see is they bounce right back really fast like this. The wicks should be like, you know, not like closes underneath this, and so that makes that okay, but you're changing strategies there. And then you wouldn't do anything here because your levels are down here for buying. Now this is where the shorting starts to come in. If you wanted to be both sides of the market, you could start to short these, and it's the same exact concept. So you just do these. And again, you could do the same. All of this is still, this is all just Simon's stuff, right? I haven't even shown you any things that I've added. This is just Simon's system for trading balance. So there's another one pretty close to the voodoo range level, a little bit sketchy, but these are clearly shorts. That one would have taken 2 tries. You would have stopped out by a tick or two, and then it would have worked there. This is another one. Okay. And now we're back into the long zone. Well, look at that. We got a signal off here. So see how we get a star here? But it's not interacting with the level, and it's not bouncing off the voodoo range level, so it's no longer like bullish momentum. So now we need to switch signals again. Once we've seen this breakthrough, and then they print this in the wrong spot, like it's not up here, it's underneath it, and it's reacting as if they're trying to take back the level, but they clearly lost it. So once you see that, you know that you've got to shift back to mean reversion. And so once again, that's an entry. And then again, let's go long only now, just so that because if you try to be too active, it's really confusing. That's an entry. You see the algo. And then this one's an entry. It gets like 10 points and stops out your runners. Then you get back in here. Same thing. So once it starts doing that, giving you 10 points, stops out the runners, take it again, gives you 15 points, stops out the runners. You know that, and then you look at the channels. See how the channels are now dropping on like a 45-degree angle? So the market has changed from balance to going bearish. It's just not very severe. It's slow grind down, which is something we see a lot of now. And the hallmark of that is 45-degree angle down with the channels, and then an inability to get a VPOC, this yellow line, on a bullish bar. This is the last one that they had a bullish bar VPOC above the midpoint, the gray line. See that? So this one, they couldn't get the VPOC up there. This one closed bearish. This one, they couldn't get the VPOC up there, although it's pink, so it doesn't really count. This one, they got the VPOC up there, but it closed bearish. So as soon as you start seeing that, you know that you need to shift and stop buying those levels, because they're not going to produce mean reversion until you capitulate. So what does capitulation look like? Usually it's go back and forth in the level and then go lower. If you have another level, you can look for the entry there and then back up again, right? Now what we might see is chop, chop, chop the level and then momentum. That would not be unusual. Oh, man, I drew a lot of lines on here, sorry. I got a little carried away. But that would not be unusual at all in a situation like this. You have to remember that when you're trading, when you're scalping 15 to 20 points at a time on NQ, it doesn't matter what the market does. It matters, but it's not that important what the market is doing on a whole. Like, I can look at this and say, like, yeah, it looks bearish in the higher time frame, but there's plenty of opportunities to get 15 points in both directions all day long. It doesn't matter what you do just fine long only or short only. Oh, that's it. So if we now think that this is resistance, then that would be a short. But we'd have to have evidence that it's bearish, right? We could do it, but it would be a little bit aggressive, because that area, even though, see how it was rejected here? and here they trapped somebody, right? They tried to buy it and they immediately fell down. So if these guys are still trapped, it's a good sell. But that would mean that there's bearish momentum in the market, and so you'd have to be confident that that's the case. Otherwise, you're going to get chop, 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 chop here, like I said before. So it's like going from long to short in the same area is generally a no-no. It's not horrible. It's just an advanced technique. And if you find you're buying, if you're buying it at price 10.830 1 minute, and then 15 minutes later you're selling that level, like there has to be. It doesn't mean you're on tilt, but it probably means you need to back off and make sure that you're like following a plan and not just like firing off on every single algo signal, which is, like I said, what I was realizing that if I did with all of these, that I would have a massive problem. Whereas here, it would just be a little bit. I would churn a lot of commissions, but they would still mostly meet that first target and get like 10 to 15 points off. But what you'll see is, even though you get what looks like a pretty good solid short signal here, it's aggressive, but the location and the signal, if you don't know the trade and perform, is you find one of these flags, follow to the right, and then if you have one bar or a wick, that trades beyond it, and then it comes back and trades bearish like this, that's a trap, what's called a trap back in trade, and it's a pretty good setup for a new pivot. And like I said, in balance, it doesn't work if it's trending. You don't fight trends like that. But if it's balancing and it's or consolidating or expanding, but not one-sided momentum, it works really well to get that 15 points, and then sometimes you'll get a retracement and then 30 points. So it's a reliable trade. The question is, how often are you going to get down here underneath the channel, and how often are you going to get your stop swept first? You obviously don't know which condition will happen in each and every trade, but you can use additional signals to try to help determine what your probabilities are. Obviously, past performance is not indicative of future results, all that stuff. But in my opinion, if I can see that in the past a certain pattern is resulting in a similar result, like over time, even if it's not 100%, but let's say it's like 70% of the time, I'm going to go ahead and follow that signal rather than go with like intuition or whatever. Like whatever other system I have, I don't have anything better than just probabilities. There is no sure thing in trading. Like there's always a possibility that you will lose the trade, and there's always a chance that past performance is nothing like future results. And while we all know that, we also know that it's a challenge of, it's a game of like limited information, and so we don't really know what's going to happen, but we do have the probability. We can figure out the probabilities if you can identify the pattern. And so just trading out of here and beyond this channel and trading beyond this pivot and then coming right back in, especially with an orange bar, that in and of itself is a bearish move, but it doesn't mean it's always going to go to the low. So you can short it as long as you have a plan for what to do when it goes your way and what to do when you're wrong. Because when you're wrong, you have to decide, is this a situation where I want to continually 2 or 3 times hammer at this? Is this a level that I expect is going to break, and if it does, I'm going to get paid well? Or is this an aggressive scalp where if it doesn't work this one time, I don't want to risk taking another full stop, because I'd really prefer to get short much higher, right? And so it just depends on the conditions, and that is something that, like, I have a system for like organizing that information, but it wouldn't make sense unless like you've been coached by me. So like I've got lingo and what's it called? All the I've got like the jargon and then for each phase there's rules to help determine what phase you're in and then what strategies you should be using each phase. But those phases are dynamic, and so a lot of times what you'll see is like you might have 4 rules for how you know that we're in a consolidation phase, and you could have 3 of the 4 exist for a long time, and then and then 4 of the 4 exist for just a little while, and then all of a sudden 1 of the 4 exists, right? And so you need to know, you need to be okay with deciding like what do I need to see to take this specific setup. You need to have that objectively figured out prior to trading. And that sounds like a lot of work for those who are usually trading with like instincts and you know what people like trading what you see, right? Rather than trading what you plan. The idea of having to plan out that if this happens, I will do this, and if this other thing happens, I won't. Rather than I'm going to buy when it looks like it's going up and I'm going to sell when it looks like it's going down. And yeah, in my experience, having whatever process it is, if it is something that you believe works and you have back tested it, you've had experience with it working, and then you also know what conditions it doesn't work very well, and you know how to manage your risk so that your risk of ruin, so that you size appropriately and all those things. Once you have that all figured out, it doesn't matter what process you're using. You're going to do, in my opinion, way better than you would have if you were just like, okay, it looks bearish, I need to find a spot to sell, and then just like trading the location alone. Because if you think about it, like let's say that you identified that this area here at the settle, the 40, the 10.840. Let's say you decided that's probably going to be sold, right? You think it might be tested, but I think once it's given up, it's probably going to be sold. Like that's fine, but do you sell here, or do you sell here, or do you sell here, or do you sell here? Or do you not sell any of these because you need some other situation? Or do you sell all of them? And then where do you manage risk? Do you put your stop here and then get stopped out, and then put your stop here and then get stopped out? Like what's the right? What's the plan? And I see a lot of people on Twitter share things like short under 10.840 if it's weak, if there's weakness below 10.840, short it, and then when the market goes 50 points lower before going 50 points higher, and then before going 100 points lower, the person doing the tweet will be like, see, we got underneath 10.840 and there was a perfect sell opportunity for 100 points, when in reality you would have to know that the first one was going to be 50 points and then trail stop, and then you'd have to know to attack it again to get the 100-point move. And they don't usually say that. But it, like, if you on a microcosm, that's what we see all the time, where it's like here the 10.840 level was quote unquote valid, right? Because you got a move to the downside. But then if you shorted it here and let's say they rip higher, like did it just stop being valid? Like what's the right, like what was the rule? Like what did you have to see? Did you have to see a green bar? Did you have to see a star? Did you have to get over a certain amount? Did you just have to stop it out one time but you can't take it twice? Like those parameters need to be determined, and you need to be able to do it consistently so that you can journal whether or not what you're doing is working. And I tried doing that with the footprint, and it's really hard. Like, I love order flow. I'm fascinated by it. I think it's the signals on the footprint are the right thing to look for, knowing where the trap traders are, where there's aggression, and where to expect people to defend big orders and how to trade around low volume nodes. Like all that stuff is really important to understand. But when you go to actually trade with the footprint, like you could be like, okay, there's my trap sellers, so I short there, right? Like that's cool, like that's great, but do you short this one? Like because it's kind of the same idea. You got this big low volume node below it, a little bit of volume build way at the top of the volume cardinal, and then rotation down. So like if you were going to get short right here and they come back up and reject it, is that the same trade or is that going to be filed away as something different? Like if this one works but this one doesn't, is that a 50% win rate on that trade, or is that a 100% win rate on one trade and a 0% win rate on another type of trade? I don't know. Like I personally couldn't figure it out. That's where I got stuck when I tried to trade footprint. It wasn't that it was impossible to find a trade. Like you can see it if you know what you're looking for. The problem in my experience was once I've had a trading day, whether or not it's good or bad, how do I look back at each thing and say that I did this right and that wrong, and that I can expect that this is going to work this often and that's been working this often, and in these conditions this setup seems to work, but in that conditions it doesn't. Like that kind of like objectivity was completely missing. And even when I tried to explain like what it was that I was looking for, like I'd be like, okay, you know, I need a high volume area above a low volume area, and I need to attack it and then find big sellers aggressively shorting below it. Yeah, that's it, right? And so it's like I'd short that. But then I would see it again and it'd be just a little bit different. And I'd be like, wait, do I have all those components? Like, is it all there? Like, I've got this, I've got that, I've got this, but this isn't quite, is that good enough? Does it need to be 180? Can this be 150, right? Those things I had to figure out, and it takes time and a lot of patience and practice, right? With the algo, it's already done. We did that. Like, years of work has already been done to figure out what those calibrations are. And it's like it's exactly the way it is, the way, because it's working. And when it doesn't work, the room as like a hive mind identifies it, and then those of us who do the programming and the back testing, and everybody kind of has a role, but they go back and they figure it out. Like, okay, why isn't it working anymore? Let's see if there's a different calibration that needs to be done. What can we change? Should we change it? Should we just not use that setup until the market changes, right? Those dynamic decisions are something that regular members don't have to worry about. All regular members need to worry about is, where do I want to be a buyer, and did I get a green bar or a star there? Right? They don't, and then just to be attentive and disciplined, and just only trade when the algo tells you to in the locations that you're supposed to trade. From there, like that's hard enough, learning that. You having to also decide when a green bar should be green and what exact parameters need to exist for a star. I'm telling you, you guys, paying what really is a very small price for room membership in the Train and Perform room is amazing value because of the number of hours, years, I mean manpower, and like, you know, I can't even tell you how much work it is to build something like this. And if you try to go about it yourself, you're going to end up spending a lot of time and losing a lot of money figuring it out if you try to do it by yourself. Whereas with a room of people, it only took us a few years. But by yourself, it would take way longer than that, unless you're using some machine learning tools and things like that can speed things up a little bit. But I'm telling you, the difference, for me anyway, going from I want to trade trap traders, and so I want to look for stuff like that and stuff like that, like going from that to overnight saying like, oh, that's your strategy, you look for trap traders. Well, my coach will be like, here's what you're looking for. You want purple bars underneath the channel that are followed by green bars or stars. That's your trade. It's the same thing. You just don't have to think about it anymore. Just wait for that pattern. And it's like, oh, well, that's kind of nice, right? And then if you're looking for the short, it's orange bars followed by, or sorry, pink bars followed by orange bars that trade underneath it, right? Now, it sounds really easy, but it's not, because you also have to manage the times when it doesn't work, and you have to manage where you're going to get where you're going to do your trading. You don't want to take every single signal. You have to learn how to decide where to trade. But knowing that I'm not going to short here, and I'm not going to short here, and I'm not going to short here, but that here is okay, and also that my risk parameters are already worked in, that I know my short has to be at 54.25 no matter where in here my entry is. So I could short aggressively here, I could wait for it to pull back and short here, but my stop stays at 54.25. And I like just having those parameters figured out for me, and then having the entire room of traders basically doing the same thing. And when you start seeing them say like, oh yeah, I took this trade, and you're like, oh yeah, I see it. I've been taught that trade too. I could have taken that, right? You start to build confidence that that you know what to look for. And for me, like I literally spent almost a year trying to learn footprint, and I understand it great. I could teach you how to trade footprint, but there's really no reason to, because there's so much analysis that has to go into every tick and every structure, and every system everything is just a little bit slightly different every day. It's hard to quantify, and the algo does that for us. So the algo is already reading the order flow that's coming out of the footprint, and that we see on the order book and the time and sales. It's all built in already. I don't even have to look at the DOM, you guys. Like, I only use the DOM for moving my stops and targets into the correct position. And other than that, I just use the basic order entry, because I have a Renko bar predictor that says if it's bearish, it's going to close at 10.835. And if I know that that's going to be a trigger for me, because I know what my patterns look like, then I would be getting short at 10.835, maybe one tick lower than that. And I already know that my stop has to go at above 53.25, probably like 54. Just to be safe. And so I could already have the order in there ready to go, and then I just wait and see, does it trigger, does it not? And if it does, it would get me in, and if it doesn't, it wouldn't. I don't, like I said, I don't have that luxury here. I'm like squinting my eyes and trying to see well, did they trade through the high volume area, or did they have enough? I don't want to have to think about all that and then be like, oh wait, but the speed decreased. Does that matter? Right? You'll come up with all these great ideas, but you won't be able to execute any of them with any efficiency. Yeah. So I personally, when I found Simon's group trading this, and I got to know them and recognized what it was doing, I very quickly realized wow, this is going to change everything. I'm spending all this time and energy learning the wrong thing. I'm trying to learn to build this, and it's already built. It's just sitting there, it's waiting to be used. So it's yeah, it was a no-brainer for me to get to know it. But after I learned the trades that are here, I did feel like I wanted some more information. So I didn't even have to look at the footprint, even on another screen. I don't even look at this anymore. Everything I need to know is already coded in here, and including the locations where I'm willing to trade. But like I said, preferably what we want is longs down here and shorts up here until proven otherwise. And I can show you what that would look like. or maybe they'll start getting bullish here, and then we will know. But if you found this level and thought it was bearish, this would be a short. I personally don't think it's a short. I didn't take it. I'm flat at the moment. Yeah, it doesn't mean it can't go down, right? The algo is not 100%, but it's going to work a heck of a lot better if you reserve your trades for ones that set up in locations that make sense. So having a way to find locations is another important skill. And I spent my time, once I had the algo, once I had this last year, I did a bunch of research to figure out location-based trading. And I realized that combining the two, having a system that shows me where to trade, like the Voodoo Range system, and then the algo to tell me when to execute, like the combination of that is just deadly good. Like just consistent. The days that I don't do well are the days I don't follow the rules. Right? Or the days that I'm distracted, bored, tired, overly hungry, hungover, etc. They're usually mistakes that I make. It's very rarely because the algo just stopped me out over and over and over again. But part of that is because I've had experience with how to trade it. It takes time. You don't just jump into this and know what to do. You do have to learn it. It's almost like learning to play an instrument. Like, you learn to wait for the best signals, and then you start to learn how do you feel when an aggressive signal goes off and the market moves 30 points without you because you decided that you didn't want to be aggressive, and how is that going to influence your trading for the rest of the day? And then you can start to make decisions like, do I want to take 80% of the trades? Do I want to only take the top 50% of the trades? Because there's just so many ways it can set up. Yeah, so this would be a aggressive scalp, speaking of which, if it does close at 35. I wouldn't personally take it. I do think this low is vulnerable, though. But, yeah, I'm just not thrilled about selling down here. But I'm kind of tempted to do it just to demonstrate because I do think it'll work. But if it doesn't, what's going to happen is this is going to all break out and we're going to get into a bullish momentum. And I would not be surprised to see that. You can see that these are starting to turn up and we can't get that VPOC below the midpoints. That first hint that something's up. And then this blue diamond is a signal that's not on Simon's chart, but if you're familiar with the trade and perform algo, it's not there. He's used a diamond before, but this is actually a signal that there's a volume anomaly in that bar, meaning that something's unusual about it. The volume or the volume delta or something like that is relatively different than you'd expect, and then the inverse of that is a purple one right here. So generally, the easy rule of thumb is that the diamonds, the outside of the bars, the purple and the blue diamonds outside of the bars like this on my charts, generally they get traded through. In other words, they don't. See how this one is at the low? This is really really rare. Usually, you're gonna easily trade behind it, and then only then will you find out if it's a supported area, because generally the market likes to know for sure that high volume areas continue to have interest, and so they don't just stop on a dime. Usually when they hit this, they will go run through it a little bit. The one reason why this one might not get tested is because the VPOC is so high in the bar. See how this is the open and this is the close? The yellow line is where all the volume was, the price that had the most volume. And you can see that now volume, the dashed white line is the developing point of control on the 2-hour chart. So you can compare that to the yellow line, and you can see that where the price went up here and then volume followed it, see? So now we've developed volume above, But for some time, we had volume down here. Now, another way to display that is like this. And you'll see that the VPOC of this rotation is here. And that's basically what I'm trying to say, is that the VPOC for this is this gray line here. So once you get price and volume to shift higher, the natural thing the market wants to do is come back into that high volume node and see if there's still buyers there. And if there are, it'll bounce and potentially get momentum. The unusual thing here is, let me show you what's normal. And that's when you have the diamond, see the purple diamond behind the star here. It tries to go lower. They come back in and chop around in here, only to trade behind it by just a couple ticks before they continue lower. That's normal. That's normal for NQ. Same here. This purple one started the party. They tried to come back into it twice and then rolled over. Are they going to break this? I don't know, but I'm not surprised that they came back into it again. So when I see pivots, and when I say pivots, I mean these power bars with the purple flags. When I see those pivots and they have diamonds outside of the bars like this, the blue and the purple, I'm right away thinking that I'd prefer to be active behind those bars. So rather than buying this one, I want to buy when it does that. I want to buy here after that. That's what I'd prefer because it's less aggressive. Otherwise, the alternative, I'll show it to you here. So this one, the volume was in here, and that had a small volume build, but volume then continued lower, and it established the VPOC here. See how that dashed line kind of continues here? So that's the VPOC. So what you can do is you can actually mark it off, and you can say, this is probably the orbiting location where the market's going to go around, until we leave the area. So we orbit around it, go lower than it, go higher than it, go lower than it, go higher than it. What do you think's next? It'll keep doing that until it establishes above or below it. What does establish above or below it look like? It looks like this not happening. Bars not being able to be printed behind the line with volume developing behind the line. So we shouldn't see this if we're trying to establish volume higher. That would be unusual. Doesn't mean it can't happen, but it's unusual. What you would need here is a strong bounce for that to happen. If we trade back into here, it's probably going lower. And so you don't have to know that to trade this system, but that's how you can sort of see what is likely to happen next just by looking at what the pivots look like and what happened when the market turned, and then where the volume is compared to where price has been, and compared to where volume is before. But the easy way to think about it is just if you just watch the gray dotted line here, generally price wants to come back to wherever it was. That's the easy way to think about it. See, now this looks like a better entry, but these being lined up is really dangerous because if they long here, if they buy here, it can blow out higher. It's just a scary place to long because, as we see here, it's like right at the edge there. So you'd have to think that it's no longer balanced, but instead is momentum. But it is bouncing off that midpoint. So a diamond inside, like this, the white and the red diamonds inside, if we get a white diamond here on the inside of the bar, or a green bar, just like this, that would be a sign that momentum is developing. It's unlikely to happen. It's very rare to occur in this scenario, but the pattern of pink bar, orange bar, not volume diamond, the speed trap diamond up, can produce breakouts. It's just that what we just talked about still applies. We have volume that got developed down here, and we traded above it and didn't break out the first or the second time. So like, to expect this to blow out the third time, I'd have to have some other reason to be bullish, like a higher time frame. And I don't. So, or like a catalyst, for instance, to get me out of this zone. It doesn't mean it can't happen, but it probably means that it usually won't. So instead, what I'd like it to do is come back into this one and set me up again down there. And I can happily take a long there. Otherwise, if it doesn't set up and instead it comes up here and it rejects like that, well, then maybe we're bearish, right? Because there is bearish momentum already developed here. So the bear turn is easier to get, but I would rather wait for this push down and then the retest rather than just short one of these, even though I realize that right now those trades are valid and they are working and there's nothing wrong with them. They are just not aligned in the location that I planned to be shorting. So it's not wrong. It's just different than what I plan to do. And like I said before, when I start trading in a way that is not how I planned, generally the result is I lose. Eventually. Not every trade, but if I don't catch myself, that's usually the result. My better days are the days I have a plan, I execute that plan, and I let the algo tell me when to trade. But this and this, these were absolutely, totally valid entries. So there's nothing wrong with shorting it. You can see they show up on Simon's too. That's ES. No. I'll make it smaller. Where's the 24? Right there. So they show up on Simon's as well. And see how they're at the top? They're upstairs, so they're good scalps back to the midpoint. So Simon's already taking profits here a little bit. And there's nothing wrong with trading that way. I'm just not quite that aggressive. So the times I short this and it bounces, I get really frustrated. Because I knew that I was a buyer right here, and that if we hold this, it could actually be developing momentum higher, and that the much better short will develop up here, because then I can target this area and get like a 30-point move. It doesn't mean that'll set up though. And so there is, if you're okay taking a lot of trades and it doesn't bother you to take 2 or 3 stops in a row every once in a while, then there's nothing wrong with being a more aggressive trader, because then you're not going to miss very many trades. And you can just short when it says short and buy when it says buy and be okay with getting stopped out. I'm not against that, and that's the way my coach trades, and there's lots of people in the room that trade that way and they do great. It just doesn't fit me personally. And I think a lot of that has to do with confidence, to be honest, because I'm real confident when I decide like this looks like a good day to be aggressive. I'm gonna take more trades. I can be really confident and get in just right, but then when it stops out and then it sets up again and then that one stops out, suddenly I go from like a confidence level of like 105% to like 60%, you know, and then the next trade I'm like, this one looks really good, but do I really want to take a 4th stop today, right? And then I'll miss the really good trades and then I'll tilt and lose a lot of money. So instead, what I've learned is that there's some trades that I'm just better off not taking, because when they don't work, and I didn't expect them to work, I feel better about my next trade if I skipped it. Whereas if I take it, I might actually like sabotage my trading day. So, like I said, the nice thing about having the algo is that I can very easily and objectively categorize which trades are very aggressive and which ones are actually pretty conservative. And I can actually measure them based on results over time. And I can say that, trade X only shows up on average 2 times in the week, but when it does show up, it's likely to work 70% of the time, right? I will take those trades every time if I have results like that. That is an example of a trade setup that I would literally take over and over and over again every time. If that's how it's setting up, where it only shows up once in a while, but when it does show up, it works 70% of the time, you can expect me to be in that trade every time it sets up, is if I catch it. So that's, but then if it's more like this trade, where this trade sets up maybe twice an hour, right? The orange bars, and especially, or like even orange bar, I should say orange bar at the top of the channel, and either trap back in, which is this one, or else pink bar, orange bar. Those set up, I don't know, 25 times a day on NQ, maybe 10 times a day on ES, at least. And they work often, but not 70% of the time. Over 50, but not all the time, right? And then there's conditions where they work better and conditions where they work less. And so if you can identify when you're in a condition where it's going to work better and you take all those, but then you avoid it when it's going to work less often, you can get 60, 65% accuracy. But figuring that out, it can be a little tricky, because it means you have to know what market phase we're in on the time frame you're trading. And sometimes you'll be wrong. Like, if we're in a bearish momentum market phase, this will work and I will miss it and it will take out this low. And if that's the case, this trade and this trade would both go down as a win that I missed, right? Because I thought they were too aggressive, because I didn't see the bearish momentum. Now, if we were trading in a bigger range, and I thought that I could get 20 to 30 points even if it wasn't bearish, just by taking this back to the mean, I would be much more aggressive taking those trades. But right now, the market's barely doing anything. It's so slow. And it's kind of just like chopping in a small range that it's hard to get behind doing it, because I know that a lot of times I'm only going to get 10 points. So in this case, the entry would have triggered at 34, let's say 35. And it would have just missed my 10-point target by 2 ticks. I can't tell you how frustrating that is, right? Especially since it happened twice. You see this one, 35. Now it might, yeah, okay, it hit it. Thank goodness. Sometimes it doesn't. Okay, the first one did hit the 10 points, and the second one just hit it too. So both are winners, and I skipped it because I didn't think I could handle the 9-point move and then the rip higher. Although it does make sense to come back to exactly this level. So the VPOC here, that gray line stayed still for this whole move down. And so we return right to that level and find buyers. Very normal. That's why that dotted line is there. Is it dashed or dotted? I think it's dotted. That's why that dotted line is there. It's not so important where it is right now. What's important is where was it when the market was moving. So like as this moved down, all the volume was back here. So they pushed down here without a lot of volume. With a lot of price movement, but not a lot of volume. And then they pushed through it again with not a lot of volume. See how it stayed down here? Right? So this area in between needs to, from where this purple is to this pink, basically, needs to get re-auctioned. We need to spend time there. How does that happen? Usually like that, right? That's usually how that happens. So, does it sometimes just rip right through it? Yeah. And it did signal bearish. So, had I decided to be an aggressive trader today, I would be short. But I have no real reason to think that it's sudden. See, like I said before, I said that this was a buy zone until there's evidence of bearish momentum. The only evidence of bearish momentum is rejecting off the sell zone here, which is potentially evidence. That is one key, is this negative space here. So, a lot of people, I'm not the first one to identify this. Exactly how you draw it is up to you. I'm sure some people think there's a specific way to draw it. Usually I do something like that. The idea is, you could also do it with one of these. So the idea is, this was support, then it was resistance, and it was support, and then it was resistance, right? And then it was support, and then it was resistance. Well, now resistance is way down here. It's like support, resistance, same area, goes lower. Support, down where support was before. And where's resistance? Oh, it's where this one was. It's not in that spot where we were previously finding support, and then support turned resistance. It's lower than that. So that is that, and then the volume going up as we go lower. Those are the two hints that we might be heading lower. Whether or not we stay lower, who knows? But when you see this, sometimes it means you're going lower, but it might just be to get the liquidity. It might just be to get under this, like that, or to get under this or this. Wherever people put their stops, it's going to try to get to. You can see we had a voodoo range level down here. So, and then a 50% retrace, 66. So any of those areas that makes sense to trade back there. The confusing thing is that it doesn't get there in a straight line very often. Sometimes it does. But usually when it gets there in a straight line, it doesn't do this first. It does this, this, this. That's how you get the straight line moves, is what I call a wind up. It's not from chopping back and forth and then rug pulling. You should see the rotations expand. One way to look at that is with the zigzag. I'll show you. So this has the old, all the extra signals on it, so don't worry about too much about that. But look down here, and you got the zigzag. So see how in each one it gives me a distance in that rotation and a time. And so what you'll see is that when we're balanced, like in here, they're relatively even. Down 33, up 31. Down 35, up 21. Down 20, 50. up 1775, down 1725, right? It's like tit for tat, back and forth, back and forth. Then, but look how we get out of it. We go from, we get tighter, right? 31, 21, 17, 17. Then we go back to 20 before we do the almost 40. We almost double. See that? It was like 20, 17, 17, 20, and then 40. So we wind up here. It didn't just rug pull. It had to come back up and take out all the stops that sat above this before it could blow out. And then what does it do? It retraces even further, 50 points. So went down 40, went up about 50, and then consolidates 26. We see that that's bigger than these consolidation waves, but then it goes up 25.75. Guess what? Balance. Down 28.75. You think we're done? I mean, there's a good chance we are, right? Going down. It makes sense. We could also be doing another grind down, and those usually look like big down, little up. 26 down, up 18. 36 down, up 23. 33 down, up 31, and then we start balancing. 35 down, up 21. Here's the balance. 20, 17, 17, 20, 40, 50, right? So this is the expansion. So one clever little trick is if you draw the volume for that expansion, what you'll find usually is either rarely volume in the middle on both of them, and way more often volume on the edges, like so. And so take this out. We say this one was the volume on the way down. Let's do it. So this was volume on the way down. Volume point of control on the way down. We'll make it like pink. And then this one we'll make white, and that was volume on the way up. Now the other way to think about it is you can see that we have a profile here, right? Which is just a like it's just a visual representation. So here is a big high volume node. Here is a big high volume node. Yeah, so it's just a distribution of volume if you're not used to this. And then you see how there's a little one right here? That's where the VPOC is now. See that? The dashed line is now there. Or is it up here still? Let's take a look. Not sure. So now when we go to our tighter look, we can see that when we came down, right, on the big move down, all the volume is at the lows. As we came up, all the volume was at the highs. Or no, not at the highs, down here in the middle. But on the way up, there was a volume build at the highs. So where do you think they're going to spend most of the time trading? Well, they need to fill in the low volume areas in between these by bouncing back and forth from one distribution to the next. It's not going to be exact, but that's kind of what you would see if it's bearish. And so by knowing where the, if you want to, now you can do that on any time frame, right? I went on a smaller time frame to take a close look at this move to the low. But you could do that on the 80 tick and maybe get a target that way. But the important thing to see is to see that this low volume node that they have to fill in here, that's very small. This low volume node is much bigger. So if I had a choice between buying this or buying this, I'd much prefer to buy down here, right? And if I have a choice between selling this targeting here or selling targeting here, I obviously want to get down here. The problem is selling here is kind of dangerous because your stop has to go above the highest volume build. So the easy way to solve that is just don't short here. And I realize that's not what people want to hear because the market might go lower. And people like to short, and you want to believe, like we want to believe that there's always a good trade out there on every chart, but it's just not true. Oftentimes, even in balance, there's specific times when trading is really good, and then there's some times where like literally almost any trade you take, especially in one direction, it's just going to fail no matter what. So this is a good example of that where the shorts might work, but it's not going to be easy, right? You could short this, but the likelihood that it just falls right to the low is pretty slim because it's got this big volume build in the middle. And so usually what you see is they have to develop volume down here first, and then they'll retrace, and that's where you want to sell, in my opinion. That's where I want to sell. That's the higher odds sell. But if you're okay holding on to that short for 45 minutes to see if it does anything, it technically is paying out at the moment. So well, I might say that I don't really want to do it from a P&L standpoint. If I'm like looking at the results, it looks like it would have been just fine. Which is nice to know that even if if anything, I'm probably being too conservative. But like I said, if you really actually get a real money position in at one of these spots and you see how choppy this is, you realize that like shorting there is just kind of unnecessary. There are better plays, in my opinion. Like if every stop is equal, just like to make the math easier, if every single stop has equal weight, I don't want to take stops that I can avoid. And as a saying in our room goes, if it's not good enough to take with full size, it's probably not a very good trade for you, you know, one way or another. Either you haven't built the confidence to trade it correctly, so therefore you shouldn't be trading yet. You should be practicing and studying it, or it's good enough to take with full size and you're just being like weak and scared. And scared money usually loses. So in either condition, it's either good enough to take full size or it's not good enough to trade it. It doesn't mean you have to take it with full size. But if it's not good enough to take with full size, it's probably not a good enough trade. Like if your thinking is, well, it's a pretty good trade, but it's not good enough that I take it with full size, the solution should not be take it with half size. It should be the trade's not good enough to take. If it's good enough to take, it meets all your parameters, but for some risk management reason, you need to trade smaller that day, like for instance, volatility is high because of CPI report or the Fed speaker, like there's a Fed speaker at the time or whatever, right? Like there's all sorts of reasons to trade smaller size. You do that for those reasons. You don't take, in my opinion, smaller size because you think that this individual trade is not quite good enough for full size. If it's not good enough to take with your full size, then it's it's not a good enough trade. Hope that makes sense. But it's yeah, it's a something I had never thought about before being in the trade and perform room. And when I started hearing people say that, it's okay to take something with half size, but if it's not good enough for full size, don't take the trade. Just like, oh shit, I didn't even think about it that way. It's pretty smart. Because you will have a trade good enough to take with full size. It'll happen. It's like if you're anxious about it, then you just have to ask yourself, why am I anxious about it? Why am I so, why am I more interested in trading? See, but something my coach says is your desire to trade your system and to stay on process, to only take trades that fit your system, that desire to do it right, to perform well, not to make money, but to perform your duty, which is to take the trades that set up in your parameters. The desire to do that needs to be bigger than the desire just to trade something. If you're more motivated to get in a trade than you are to run the system, like maybe you trade somewhat for excitement, for instance. Not to say it can't be exciting when you trade a system, but if you need that excitement to make you feel like you had a good day, if you need that chance to make some big money, right? Like if that's important to you, you're gonna lose. You're gonna lose money trading futures. I mean, everybody does lose money sometimes trading futures, but you're gonna have a hard time being consistent. And I know that because I still struggle with that. Not every day, but there are days where I have a bigger desire to trade than to run the system, and those days I should not be trading. That's the solution. Trade on process. Do what your plan says you're supposed to do, or just don't take any trades. I will say that the Apex evaluations have really helped me have a way to have a sense of the pressure and excitement of having a real money trade, because you do have something on the line. You have the potential to be able to trade someone else's money if you can pass the evaluation. But the extremely stringent rules keep me accountable. Because if you blow it up, you have to pay to reload it, right? And you don't make any money from the thing until you pass the evaluation. So it's that whole process has been really helpful for me when it comes to being able to go to the evaluation account when I want, I think I have an idea I know what to do with, but I don't have evidence of it yet. Being able to have that middle ground between the real money account and a paper trading account that I would never even take seriously. That evaluation from Apex is a really nice middle ground where I can feel the sense that it means something, and when trades are working, you get that sense of gratification. But if you totally fuck it up, the max loss is basically just the $80 to reload it, So and in real life, if I took those trades with real money, I might lose $900 or something. So it's basically at a tenth of the risk with a potential payout of getting me funded with another account. So it's a good middle ground, and it's been great for me when it comes to learning discipline. But they are tricky. They are not easy to pass. Okay, so thankfully I did not short that. You can see that you would have gotten 10 to 12 points, and then it reversed. And this is exactly what I was saying before, how usually we see these retested, but sometimes they don't get retested. And when they don't, the behavior is the VPOC on down bars stays above the midpoint. And when we get the VPOC below the midpoint, we close bars bullish. So doesn't mean we probably could have bought this. Yeah, it'd be aggressive, but technically you could because of the action. And see how it's now going in somewhat of a 45-degree angle, the channel, right? So now pullbacks technically could be bought, and you really don't want to be shorting the orange bars or the yellow stars down, or the diamonds or any of those. Like shorts are just off the table for the period for the moment, and you see if you can get like a momentum move higher to maybe set up a short at a different location. I'm actually really surprised that they held that low. It was unusual. If you look at the ES, I guess it wasn't that unusual. They were like test, 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 and then capitulate slightly, and then run. That actually makes sense. I'm wrong. And we even got the arrow here indicating that there's buyers supporting that level. You don't really want to buy it when it first shows up. You don't want to buy this on this. But the idea is if you can, since there was a buyer supporting this level aggressively, if you can get them to capitulate and then they take back that level and they show up again, it's a pretty good trade. I don't know how often it works, but I've seen it work before. The exact opposite of that is here, where you have a buyer, a seller, the yellow one, who's defending that level, and you go lower, so they have success, and then right in his face, you get the exact opposite signal and aggression through the level. Usually, it's a sign that this area here, and see it was back here too. Here, I'll do it from there. That area there becomes support now. This. Oh yeah, that's exactly where we bounced. So that makes sense. Doesn't mean we're going to high a day or whatever, like it's, you know, or high of yesterday or anything, but it's a good way if you even just caught that out of the corner of your eye that there's some arrows going in the opposite direction and that we've traded above a yellow arrow that was out of position, meaning it was at the bottom of the channel rather than the top. Trading above this traps that aggressive trader, and he showed up twice. So it's not surprising that that created a bounce there. Making that bounce a pretty good scalp long. Way better than this short. Because the short was just location and order flow, but the order flow was like short term only. We had no momentum. And the location was kind of like eh. Because we were fighting buyers there not too long ago. And while we did trade below them, we traded down with really weak volume and then got an immediate reversal. It's like a V reversal. Usually those are eventually retested, but not right away necessarily. So maybe a little higher and then roll over and test this. Or it's just done going down. That's possible too. The only problem with this trade is the risk is kind of big because you have to put your stop down here. And your stop on this trade goes way down here. So, oops. Man, can't, there. So yeah, if you wait for this star to print, you'd be getting in at like, best case scenario, 10.840, and your stop is like 10.822. It's a big stop. Like 18 points is more than I'm usually willing to risk. But it's valid, and I like it better than the short. It's just to get 1-to-1, you basically have to get back to the voodoo range level to get better than 1-to-1. I guess that'd be 2-to-1. Oh no, it's not 20 points. No, it's not. It's just a little over 1-to-1. So yeah, it's a lot of risk. It basically only works out if you think that that breaks out very regularly. And I don't, it doesn't look like we're fixing to break out to me. It looks like we're fixing to stay here. It might break out, but I don't think it does it 50% of the time. Maybe 20% of the time the breakout works. So that makes that 18-point risk a little bit sketch. But it is the best entry unless you took this one. And like I said, I didn't because it had a diamond on it. But the star that came after it was actually a pretty good entry that I saw and didn't take. But once you see this, followed by this, and they had that wick, you can basically buy this pullback. So I did have a chance to get it. I have to get better at adding on the pullback or entering on the pullback. It's something I have not practiced a lot, but it's a really good technique. I see people in the room doing it, and it works great. For instance, if you didn't want the 18-point risk, and they come back in here and they test, you could buy it there. It's better when it's the very next candle, or the very next bar, because you have to be careful that they're not setting up a short signal on the way down. Otherwise, you'll get in and then immediately want to be out of the trade because it signals short. So you kind of, it's a very advanced technique because you really do need to know the patterns. You need to know what to look for to have a sense that you might be wrong. This might actually break out. But see how we're right up to that level? 10, 8, 54, 25. And again, that level is, where did we get that? Was it a VPOC earlier? Where did we get that level? Where did we get that level? It wasn't the larger VPOC, that's white. I thought. Oh, is it from the higher time frame? It might be from the higher time frame. 10.854, or is it? I'm not sure. I had it there for a reason. I don't know why. Oh, I think it is the 80 tick. I think it was the higher time frame. 32 tick demand. Okay, from a 32 tick chart. Okay. That's interesting. So there was demand there before, so we'll have to see if there's supply there now, because we traded under it now. This is the problem with skipping the aggressive trades, or the ones that have big risks, is that you end up, like, I'm fine with not taking these, but the pullback was definitely the best buy. I don't think I would have held it over through all this. And then if it would have pulled back here a little further, that would have been a really good entry. So it's hard to do it right here at the top of the bar, but the top of the channel, I mean, but it's, if I could get it for like a 15-point risk, it's the right thing to do, because then all you really need is 15 points, and that's not hard to get. I did have the location right. I just didn't, the execution leaves a lot to be desired. Like I said, even though you have all the signals right in front of you, actually deciding which ones to take and when is not easy. Because you want a consistent way to do it. And if you take too many of them, you'll get too many stops in a row. So you do kind of have to, it means you're going to miss some moves. And it means you're going to take some stops too. Okay, so they went up into that earlier demand zone that we've now traded under. And remember to always watch that gray dotted line. It looks like it's stuck underneath here because I don't see it. So it must be right there at 10,840. So all the volume for this move here. Oh, it's at the low. That's weird. Interesting. There must be a lot of volume in this last bar. Or all the volume is at the top, I guess. Is all. It doesn't mean it has to have a lot. It just means that all the volume is at the top of this bar. That's potentially problematic for bulls. Unless they close it higher, then it's all good. But you can see the dashed line is the voodoo range level, and it's not unusual to have those active support resistance, but they usually won't if it's like a true breakout. It won't just like stop there. Like you can see, they can get traded through. See this? But if they reject it after the breakout, it's probably not going to hold. So it's a location to watch carefully. So let's see. The location's good. It's just there's just no setup to do anything here. But you can see it. Makes sense if we can get up here to look for a short back down. That does make sense. Otherwise, if they're not going to come back to the low, then it's possible that we can get a breakout and then a pullback to buy. So it just kind of depends on what the order flow is here. But I'm not going to aggressively short this, that's for sure. I don't think I have a setup. Does it have a... Oh, see, this is why it's nice to have these lines, is it actually is a setup if it closes bearish. It's a trap back in. From a long time ago, though. That must be what this green line is. I must have put it on top of a pivot. Right here. Couldn't remember why I put it there. That's what it is. It's a pivot. Okay. So technically, wait, was it pink before it? Yes. So technically, it would be a short if this trades to 47 before it trades to 65. I guess we can take it. I mean, it's not necessarily going to fail. Those do work often. Let's see what happens. And it is getting pretty late, so let's see if this works. And then I'll close it up. Because if we just go straight up, there's really nothing to do. Let's see if we can get a short here. Where's the volume again? That's the problem, is the volume going up here. Oh, it's way down here. It's probably not a very good idea. You got all this volume in here that's going to act as support. And it's not high enough to really think that it's wound up for a roll down, but it is at the voodoo range level, and it would be a valid short if it gets there. So said, I'm supposed to take those trades, so I guess I can give it a shot if it sets up. I could try to take it on a pullback, make it cheaper. That would be one option. Like, yeah, it is valid. I don't like that we broke through both of these power bars. I don't like it. I don't like it. So we broke through this one, and then we have a. So it's like it's a trap back in on this earlier one, but it's not a valid trap on the 2 here. I don't think that's good enough. We'll see. I don't think it's good enough to take. We'll see if I'm wrong. It does have the pink background though. Usually when it has a pink background, if you can trade underneath that candle, it can get a roll done. It might not set up anyway. If it doesn't close bearish, there's nothing to do. What about ES? Oh, ES just looks bullish as fuck. Are they gonna do it? Yeah, the problem is all the volume is down here, and so it's really just a scalp. We do get the arrow. Let's see if it'll pull back a bit and give me a cheap entry. Maybe I'll give it a try if I can get it really cheap. But yeah, technically valid. Seems pretty aggressive to me. We're not yet at the location that I wanted to be short, so it's a bit too aggressive. But I'm curious to see if it works. Because if it does, it means that those levels have shifted. Those supply-demand zones. That we drew at the beginning. These guys. If this works, then this is definitely shifting down. And it's possible that this is the wind up to the bigger move lower. But you don't want to get too far ahead of yourself. I mean, just because it's got one bearish candle doesn't mean that it's going to go to the low. But I've definitely seen that set up before and play out that way. So, and it was a valid short. But the hard part is that it broke above this pivot, and this pivot. And on this, dropping back into this one is valid. But these two got a whole bar above it before it trapped. So that is not a valid trap on these two. It's only a valid trap on this one. And I'm not super psyched about taking a short in front of a trap that's not valid, even if it's valid on a higher time frame, basically. Oh, look at that. So this is where you would short it for really cheap if you want to try it. But like you're gonna get instant stopped most of the time, but you'd have like a 5-point stop. So it's like, hmm. So the stop goes at like 61. And like you just expect it to get hit and you take it as high as you can.
Order filled.
Okay, we'll give it a try. So stop is super small. Got to be quick with it. And I will aggressively take profits here. Mostly taking this because I want to go to bed. And I'm trying to practice taking these pullback entries, even though they stop out fast. When they work, they pay really well. So I'm just practicing the execution of it. But I don't expect it to work. I don't. I think I'm just going to get instant stopped. but it's not even a 10-point stop, so it's like here they come. So I am short from 53. And what Simon always says is if you don't like the trade, get out of it when you're profitable. Don't like bail out when it's 4 points from your stop. I try not to bail on trades anyway, even if I don't like it. If I liked it when I got in, it was good enough to take. And it's only good enough to take if I'm willing to take it with full size. And the only way I was willing to take it with full size like that is if I could do it for cheap. So that's how I made that decision. Here they come. They're making it slow and painful. Usually it's just like, stop. So those signals are only going to be valid if it closes, the star and the arrow are only going to be valid if it closes all the way down at 40.75. Otherwise, they'll just disappear when the bar closes bullish. They're just warning me that they'll show up if it closes bearish. But once it closes, they don't go away. So if you see them blinking on and off, it's just warning me that if it closes bearish, that's what we're looking at. But it could change between now and the actual close because the conditions will change. No stop. Looks like they want it though, doesn't it? My coach Simon Black, he'll actually add to the trade here for like 3 points of risk. It's like, and then take it off at like 5 point profit. It's nuts. Like he'll work it back and forth like that until he has zero risk left. I'm not that talented. I will do the pullback buy one time.
Order canceled.
They got me. And like I said, it's not surprising, right? It makes sense that this is bullish. But the times it works, it's worth a small stop. Now, I wouldn't be surprised if they pull it off right here. If everybody's stop was right above the voodoo range level and they just rip it down now, it kind of makes sense. But you obviously can't just short because you think it's going to go down. It has to set up. we are sitting right at the level, you can see. So for me to think it's bearish, now it's got to come all the way down to 47. Which, like I said, can be pretty frustrating since, like, we were in here and then got stopped out, and it comes all the way back, and you could technically get in again, right? And you can see why being aggressive all day long is tough because you end up taking those paper cuts, and you have to just kind of like confidently take the next trade and have like a built-in what's it called, system for managing risk, so you don't just keep like hammering at it. So for instance, like we all have daily loss limits, number of trades we're willing to take in the same area, number of stops we're willing to take in a row based on like what trade you're taking. Like those are parameters that are kind of personal decisions, but you want to have that figured out before you start trading. And I even said it. I said I will take it once, but I won't take it a second time. Meaning that even if they come right back in and roll over, I won't be in the trade because I took the aggressive trade instead. I could have also chosen to skip the aggressive trade and wait to see if they roll it over after the aggressive trade fails, but then sometimes I miss the first one, right? So, and then you could choose to take them both if it was an area that you really thought might be a good place to short, but I don't have any great reason to think it's a good place to short other than the fact that there's a level there. But like all they need to do is get momentum and they can push through that level no problem. It's not a brick wall, it's just somewhere to watch. And right now there's no interest in selling it at all. Like from the market, I mean. Like the market doesn't look interested in actually selling it. They'd be rejecting it aggressively, which I haven't seen. Could still happen, but I haven't seen it. So far, it looks like they're just letting them sit there, you know? As far as getting long, like this was the long down here. Otherwise, you had to take this one or this one. But as I explained then, it didn't look like a long to me because we had resistance above, so I didn't think the risk reward was good enough. But this is often what London's like. It's like, especially like pre-econ release, they'll take stops in one side, shoot it up just a little bit, and then roll it over the other way and just eat everyone's stops all day. Or sometimes it just squeezes. Like I'll give you that. I have seen that before. And then like everybody wakes up to this huge gap and it's a mess, right? I've definitely seen it. Is that the norm? No, I'd say that's the exception. But there's nothing to do here. That's the important thing to recognize. There's no reason to fight the flow, and yet you can't just buy it because, yeah, there's no way to manage risk here. So you can see how the arrow's like flashing on and off. It's because like the conditions for it to show up are just barely being met. So what matters is what the conditions are when the bar closes, because then it won't change. It looks like if it closes bearish, it'll have the arrow, but because it looks like on the down ticks it shows up. Hard to imagine they close it lower though. Looks like they're taking that level. Let's see. If they can shift volume up, they might quickly. We'll see. They tested above a level sufficiently. Well, they do it. Like, it's tempting just to guess and like get back into the short where I was short before, but it's not on process. That would be an example of tilt trading for me. Like I'm upset that I got stopped out, so I'm just gonna get back in because I know it's bearish, right? Like that's how I lose money. So as long as that doesn't happen and I just wait for the signal, even if I'm wrong sometimes, it works out just fine in the end. More often than not. And even if it doesn't work out, even if it's like a red day, it won't be a massacre of my account. Because I do so much waiting. Is it exciting? Probably not, you know. But I'm always curious to see how the algo is going to set up, and see if the setups that are paying out are the same as they usually are, or if the ones that have been paying out before are now like no longer paying out. Like that's always interesting to me. Yeah, they're gonna close that bullish. That looks like a successful grab on the upside. They've most likely got that voodoo range bagged. Which means now on pullbacks we can probably get long. But it's pretty uncomfortable. The hint here that it was going to work was the lower low here that still closed aggressively bullish. That everybody who shorted here got trapped. And then you can see how that whole area, they're unable to get anybody to sell into that. See, that's just, and now if I take the volume, you'll see it shifted up. Where is it? Oh, the white. It didn't shift up. That's surprising. You'd expect that it would have shifted up. I guess this area was had a lot of volume here. Oh, here it is. So it's trying to shift up right here. Okay. Yeah, so it's going to shift up on this bar. Yeah, ES looks more bullish. This was not a lower low. That was much easier to grab. I could have bought that, I guess. That was a good signal. I just wasn't paying attention to ES. It seems crazy to short this when you look at this, so probably should keep an eye on it. ES. But again, like the problem with buying breakouts on futures is, let's say you bought this, like where do you put your stop? Like you put your stop down here, like okay, well that's 20 points. So do you think you're gonna get to 80 like 50% of the time? Like I don't know. Sometimes you do, but enough where it actually pays to do that over and over again. Like I don't know about that. The beeping is letting me know that we're outside of the channel significantly. And so if I think it's balanced, I can start looking for mean reversion trades. But it has to set up. I can't just sell it because it beeps. We are approaching that zone though. We're getting close to it now. See that? So like 80 or so is about where the sell zone starts. So if they do just like rip it another 15 points and roll it over, like then it's shortable. But what I'd really prefer is that it kind of struggles here, pulls back, and bounces off one of these levels. That'd be better. Because then I can manage risk. You know, if I can get like 15 points risk, well, that's not so bad. Because then all I'd have to do is get it to go back to the high again, you know. And if it goes to 70 and then it pulls back to 55, like getting it back to 70 is not that unusual. But getting it to 90, like just watch NQ, it doesn't do it that often. Unless it's trending. And maybe it is squeezing. Well, that doesn't happen very often. But we're just right in the middle of that chop zone here, the no trade zone. See that? All in here, like you really just don't want to do anything. And we're orbiting that Voodoo range level, which means we're probably expanding the range. Meaning these highs are probably going to get taken out. Not maybe right away, but the better play is to buy the dip. If it sets up. The shorts are scalps and they're counter trend on this time frame, so like they're not going to work great. But you can get mean reversion trades. I mean, it can happen. It just needs to like extend too much. So we'll see. Yeah, pull back here would be perfect. I won't even short it. I'll just look for a buy. Preferably down here. So that purple bar shows that buyers are pulling their orders. They're probably preparing for a pullback. Like someone bought the very top, that's why there's a star there. And that'll disappear if it closes bearish. Like it'll probably turn into a bearish star. But I think someone like probably like marketed it in right there because you could see it. It was just like there was like a little bit of slippage. Someone just like market bought like a bunch of contracts at once. the star up here is actually not what we want if we're bullish. Like that would suggest that all the aggression is on the top of the wave, and that would make it harder to return there because then they become trapped just on the pullback. We don't want the stars up here if we're bullish. We want the stars down here at the bases, and then like the green bars too. Like we want those at the base because those volume shifts are really powerful. But when they happen at the top and you shift volume up and then roll over, those guys get super trapped. Sometimes they just don't pull back and let you in, and that's just life. And then you just remind yourself, I'm so glad that I have risk management and that the one short I did try, I took on like barely any points of risk, and that I used the stop loss and I'm out of the trade. Like that, you just remind yourself, thank God I'm not short with no stop loss. Because it's easy to get FOMO in this kind of situation, but the truth is I had the setups to get long. I just wouldn't have held them because it was like an hour and a half just going back and forth in this little zone. So, just not my trade, you know. Like somebody out there was looking for like the 80-point move and bought here and went to bed, you know, and that's cool. Like I'm happy for them, you know. That's just not my trade. That's good that the star disappeared. It means we can still buy dips. A dip here would be super healthy. We are now in the previous sell zone, so it could technically be done, right? Like you don't know which high the algos are looking for. Like the mean reversion algos could be hunting for liquidity above this high and not this high yet. Like it might do this one and then take this low and then come get this high, like at RTH. Like I've definitely seen that. So you never know which one it is. You just decide which one you think it is and figure out where you can manage risk, and then if they give you an opportunity to get it there, you take it. But this is clearly bullish, so I'm not going to fight it. Okay, so we got a pink bar with a pink background way at the top. So we could get some mean reversion here, which would bring us all the way back to here. It's not a horrible short. It's also at location. See that? It's just really like the only reason you'd short this is if you thought just was a little bit too extended, and then you basically flip long once it comes back. But see how they need all this aggression up here. Oh good, that star disappeared. That's good. But they're putting in aggression at the highs of these bars. It's making them top heavy. Not what bulls want. They still have, okay, they did shift the volume up. But really, that's exactly where we want it to be, so couldn't be any more perfect. Yeah, it's an aggressive short though to take it. It's very similar to what we did here, where like the only way I would take it is if it came all the way back up here and gave me a chance to get it for like 5 points of risk. But that's just me. Like technically it's valid if it closes down here, but and the idea here is, you know, you're getting in at 71 and your target is like 55, 56 maybe. Like, so you get out before it actually hits the mean, but yeah, and then your stop has to go at the high. So like 85. And that's just too big for me to counter trend trade, but if they close here and then come back up, I could get short for the move back down. That's okay. But sometimes I'm going to miss it. And the further they go without a pullback, the less I want to buy a pullback. And especially when I see green bars showing up at the top of the channel, I'm not thrilled with that. Because like now to buy, I basically need to buy in here somewhere. So like from like 45 to 60 is basically like the potential new support zone. We'll see. But I mean, they are lined up beautifully with that sell zone though. So wouldn't blame anybody for shorting it. It does make sense. If we can get a star to the high, I suppose maybe there would be a short. Let's see if they can close this with a star at the high. That maybe they can trap some buyers. That might be worth trying. Yeah, because a star to the high here and then immediately rolling over would be pretty sick. But as soon as I see that star show, if they actually print that star up, I'm no longer interested in buying a dip. I'm gonna have to wait for it to get into balance again. And again, then I start thinking, when's the next trade, you know? And that's usually a sign that I shouldn't be trading because I have bigger desire to trade than to just run the system. You start getting tired and bored and like feeling like FOMO and all that stuff, and it's none of it helps you make money. None of it does. So slow these days in London. I guess it is 2 hours into London, so not that unusual. Oh, and CPI tomorrow, so yeah, slow and choppy makes sense. There we go, push it. Okay, let's see if they can close that star, and then maybe we'll get some capitulation. Because we have now traveled over the Globex high. So I'd really prefer the star to print though. Which means we gotta get to 89.25. And all the conditions need to still be met. They're not going to print it. Looks like a seller showed up. That means we might be able to buy a dip because they're not going to print the star. So no capitulation. No one really trapped. If they go down here, that's actually an opportunity to buy if it can set up back in the channel. Let's see. Like either one has the opportunity to set up a trade. I just don't know what it's going to be. Like I let the algo tell me what to do. I just prepare for, would I do this if this happened? And then what do I do if it doesn't work? How do I feel? Should I keep trading, right? Like those are the things that I'm thinking about. Is it worth taking a full size trade? Because if not, I shouldn't take it. Am I better off waiting for a better opportunity in the near future? Am I potentially feeling FOMO? Am I just wanting to trade because I'm bored, right? Like, that's what you want to be thinking about when you're waiting for the damn thing to close. Like, have it all figured out so that you don't have to think that through when it's happening. You already have a plan. It's just like, okay, here's the plan. I don't know if it's going to work, but this is what I'm going to do. And when it's this slow, you can practically freaking write it down. And then just see if you can follow that plan. And just practicing that, even if it's just with like an Apex evaluation account, like an Apex funding. Like just, yeah, get a cheap evaluation and just practice coming up with a plan and following that plan. So that star's not going to print, it looks like. They're going to close it bearish. So we might get pink bar, orange bar, which is technically, it's the same short as this. But there's more momentum now, so like it's aggressive. The target is back to the midpoint here, like 54. It's not valid until they close the bar, and you got to actually see the algo print. It's got to be an orange bar, or a star down would work too. But I don't think it will be. It's pretty rare that you'd have a star up and a star down. So the star up will disappear as soon as it prints bearish. And then whatever it is will stay there. Looks like it. Yeah. Tempted just to take it as a short, but because it would be valid. It's just really aggressive. But the location is exactly where I said I want to be shorting, so it wouldn't be wrong to short it. It just feels like you're stepping out in front of a train. Especially when I know that all the volume is shifted up. They could come back there. But look at all these volume builds they gotta get through. I'm not thrilled about shorting. In general. Like, this kind of action is not usually what you want to short. There's better shorts, you know. They might just never close another bearish bar again. Or just never close a bar again at all. We'll just go between 71 and 89 for the rest of the night. Let's see. Falling asleep. It's getting late. I would like them to at least set something up. Just close a bar, please. When you think about it on a higher time frame, it could be wind up and then roll over. But that's kind of fantasizing, though. Like, I don't have evidence of why that would happen, right? It's just like, wouldn't that be cool? But I don't know. It's like one of a million things that could actually happen. more points, you guys. But see how like how difficult it is for them just to even close one bar bearish. Like that just shows you how many shorts got trapped in this. And you really don't want to join the side that's trapped. It's generally not a good idea. Yeah, they can't even close that bar. Like it's, I don't know. Oh, there's a seller. No follow through. They're trying. They just can't do it. Alright, they're going to try to close it. Will they do it? It should be an orange bar, and it's technically a valid short. It's just really aggressive because the, yeah, you'd have to be shorting based on like the higher time frame. But the stop would go up here at high day, and the entry would have to be somewhere in this bar's range. Technically, only once we hit 71 and print the bar, and you see that the algo actually signaled. But you can see like the conditions for the bar have already been met. We've already gotten like our potentially trapped sellers and the aggressive seller, sorry, potentially trapped buyers and aggressive sellers have already entered the market. So technically the conditions have already been met for it to trigger, but you don't know for sure that it's going to trigger until it closes the bar. So the rule is wait for the bar to close, and if you don't like the risk associated with it, you'll just have to wait until it pulls back. And that way you avoid the situations where it really looks like it's going to close bearish, but it doesn't. And you shorted too early, anticipating it, which is a really bad habit. Because this is exactly what happens. It gets within like one tick, you're like, oh, I'm sure it'll close, and you short it, and then just like, just kidding. Yeah, I'm not going to short that. I don't want to be that guy. Like I said, I also can't just like buy it because I think it's bullish though. That's important to recognize. If I did buy it, I'd have to somehow put my stop like down here. And so I don't know how to do that and manage risk. I mean, that's not managing risk. Well, they're just not doing anything. I might just end it, you guys. I'm getting pretty tired, and they're just not leaving this area. So there's just nothing to do. The only way I'm gonna short it is if they printed the star up, got a little bit of capitulation, and then rolled it over. And the only way I'd buy it is if it pulled back into one of these supports here. So we need to move for either of those things to happen, and they're just not moving. And what usually happens is as soon as I give up, it'll start to go. So it's probably better in everyone else's interest if I just go to sleep. Let's see if they can print this star here. If they don't do it on this push up, I'm just going to call it. They're trying. Yeah, it's not happening. Just not even sufficient enough follow through to trap them at the high. It probably means we just grind higher. Because if this was going to go lower, they would have had to attack it. I mean, they technically still could, but you'd expect that to have already happened. And if I was going to get a decent pullback, you'd want it to happen before they capitulate. So I don't really see a situation playing out where I can get a trade set up. So I'm better off sleeping. No new high day. I don't know, guys. It's not doing anything. I'm gonna get some sleep. Oh, see, I'm telling you. All I have to do is turn off the stream and then it'll start moving. And see, we did get some heavy buyers here, but not at the highs. An orange bar is still technically short. It's just super aggro. Yeah. Well, you're gonna get it. Not yet. Oh my god. They just won't let it go. Wow. Longest bar ever. I forgot to watch ES. What's ES looking like? The same. Same thing on ES. Oh, but look, they're going into the voodoo range level. Interesting. It just won't close. Okay, are they finally going to let it go? They don't even have that many contracts to work through. There we go. All right, so we get an orange bar, trap buyers, and high volume, or at least a volume anomaly of some kind. So technically a short signal, but they didn't capitulate, so I don't like shorting these personally. But your target is down here at 54, 55 maybe. I'd prefer to just let it come down and see if it sets up to go higher. But my coach will short those pretty much every time. And then just like take profits very aggressively. Like he'd already be getting ready to get out. Of most of his, and then he'd hold like runners. I don't know. It's not even going 10 points though. Glad I didn't take it. Looks pretty nasty. It's technically a dip. Not the dip I was looking for, but technically a dip. Yeah, so they're getting no fall through. They're just not finished. And I don't think they're going to pull back far enough to get me my odds that I need to get long. Too bad. Just not my kind of trading. I needed to rotate both directions at least sometimes. And if it only goes one way, it's not for me. It is giving you an opportunity to short it for cheap though. When it bounces up like that into the wick, you can still put your stop at the high and hope that they just stop buying it suddenly. Very aggressive though, but it is an advanced technique. I've seen people do it well. Sure do take a lot of stops doing it though. But you can see we would need this one to close bearish because the next, if it closes bullish, then it's going to close all the way up to 83. And then you're practically buying a breakout. So it's like, there's the only way you could really buy a dip is if you got a dip. Like it's got to do more than just one bar. And there's just no sellers. They're all gone. I don't know where they went. They're all trapped. So probably the best way to trade this is just find a triangle, look to the right, buy it. It's a very crude way to trade momentum, but it works. Come on, one more bar down. They're having trouble even getting back into the channel. See that? Like, there's just a lack of any sell interest here. Yeah, I think I've seen enough. It's not going to pull back big enough for me to really get good odds. I'm definitely not going to short this. And it's just not rotating and moving fast enough for me to stay awake. Oh, if it would just give me a pullback to buy, it'd be good. But I don't. Like I said, it's just not doing it. It just went straight up, so not a lot for me to do. Well, I'm gonna get some rest. I'll see what it looks like tomorrow, or I guess in a couple hours, once CPI comes out. As far as like guesses, I think that people are pretty short. I wouldn't be surprised if we at least pop up here, as long as it's not like a horrible number. Um, and you can see how this one was right at the Buddha range level, so I would not be surprised if 11,036 got taken even. And we get back into here like 11,100. That would be my guess. Now, if it's a horrible, horrible number, I mean, yeah, we'd probably get down to like, I don't know, 10,600, I guess. Hard to imagine that, but that's, yeah, if it's bad enough, could be. So, I don't really care which way it goes. I just want to open it up a little bit. Like, I'm tired of trading in like 20 point ranges and having like 3 trades a day because it just doesn't set up enough. So I'm ready for some volatility in either direction. And yeah, I better get a little bit of rest so that I can see the screen in a couple hours. So I'll see all you guys next time. Hopefully this was at least educational, if not entertaining. Sorry, I got a little slow, but yeah, you just never know what you're gonna get. Usually, once I turn off the stream, things start moving. So good luck to everybody who's gotten more sleep than me and can stay up for the rest of London. Yeah, I hope you guys all trade safe and trade your plan.